You know, most investors are always one step behind. And that's one of the most destructive things that hurts their performance. And this week, I'm going to explain why and how to fix it. Plus, we'll take a look at the trade of the week on SHOT, and I'll have all of my analysis of the markets overall. That's all coming up in this week's Stockscores Market Minutes. Well, I got bad news. If you are a normal human being, you are predisposed to fail in the stock market. Now, you might get lucky from time to time and do well here and there, but over the long term, if you're going to beat the market, you have to first beat yourself. Now, what do I mean by that? Well, human beings tend to judge the future by the recent past. Their emotional state has a big effect on how they make decisions. So, if you've got a stock market that's been going down week after week, month after month, it tends to bring out a lot of fear and a lot of pessimism. Now, of course, as the market goes lower, it gets closer to the bottom. And it's usually at the extreme where the market sells off sharply with very strong volume when fear is at its very highest, when investors are panicking and all running for the exit door at once. That's usually the bottom. And it's shown on a chart by a trend that curves away from the linear trend line. Now, we're going to look at some charts in a little bit and I'll show you this. By the same token, when a market's moving up week after week, month after month, the buyers get very optimistic. They chase stocks higher. The crowd comes in. And eventually, the trend goes from being linear to being parabolic to the upside. It curves up and away from the trend line. When the market feels the very best, it's usually close to the top. And the people buying when the market feels the very best are often punished because that's the point that the market turns. And again, I'll show you some charts in a little bit and we'll see how this plays out. All right, well, let's get into this week's market analysis. We're going to take a look at the stock, commodity, currency markets, figure out where things are going. And then later in the video, I'll show you a stock that made huge gains this week and the indicator that I use to find these things very simply. All right, so we're jumping into the Stockscores website. And here we have a chart of the S&P 500. I'm going to start with a 3-year weekly chart. And here you can see that concept that I was talking about where the trend gets parabolic to the upside. So this is your linear trend line. And notice that it got steeper and steeper coming into August. And that's when the market sort of, reversed and started to go lower. Now, more recently, the downward trend line has become steeper and steeper. And coming into 3 weeks ago, we had a parabolic trend to the downside where the price was far below the trend line. Now, if you're watching my videos every week, you'll know that we talked about this then, and we talked about the likelihood that the market was going to bounce back. And of course, it's done that now. Well, now it's 3 weeks into the run. And so people buying now are coming in 3 weeks after the smart money came in when the market was trading on fear and emotion. Now, that's a good reason to subscribe to this channel because every week I do this analysis. It's free, costs you nothing. So subscribe and then turn on those notification bell things so that you'll get updates when I upload a new video. All right, so where are we at now? Well, the critical move this week is that this downward trend line on the S&P has been broken. Now, my concern is that it breaks from a new low, not from a rising bottom. If we look back to when this downward trend reversed back in early 2023, you can see that there was a bottom that was higher than the previous bottom. And that's typically how bottoms are made. You go down, you get emotional, you fell away from the trend line, way below it, you ran up to it, then you pulled back and then finally broke the downward trend line from a rising bottom. Very common that you retest the trend line before moving up. And we had that great rally through the spring and early summer of this year. Over the last few months, we've been selling off, but now we've broken the downward trend line and it's still in this context of rising bottoms in this time frame. So I think it's okay, but I do expect that we're going to stall here. And so we've got another week or two of upside before we run into some resistance. Let's take a look at the short-term chart of the S&P. just to see how the market behaved this week. And you can see a nice steady run higher. We're not too overbought on the S&P. There's your trend line. And you can see that we're not far above it, so it's not really overextended. Now let's switch over to the NASDAQ market. QQQ is the symbol. Look at the 3-year weekly on that one. And you can see that it too recently broke the downward trend line. That happened last week. And we're actually just starting to tickle through that resistance. And so we may be on our way to those highs there from late 2021. The NASDAQ market looking better than the S&P. How about the small caps? Well, last week we talked about the small caps likely ready to bounce back because I could see signs in this chart that it was ready to reverse the downward trend. Here's the downward trend line. We were building a rising bottom last week, as well as the bond market, and that's a chart we're going to look at in a moment. The bond market was showing signs of bottoming. And then on Tuesday, we had this big jump up, breaking the downward trend line. And we are now in this situation of having broken a downward trend line on the daily time frame and doing so from a rising bottom. So the small cap stocks looking much better. And I do think this would be one sector to look at as an area to outperform because it's really underperformed the overall market, the large cap stocks, the tech stocks. Because these are much more interest rate sensitive, I think these have a lot more gain to make before they get into this major resistance. Now we will see it get stuck at this level. I think we're going to get there in the next few weeks, perhaps two months, but that's likely where we're headed. All right, well, let's move along to the Canadian market. T.XIU is the symbol. We'll look at the 3-year weekly there. And you can see it's really just stuck in a trading range. It's a bit of a tale of two markets in Canada. You have commodity stocks like mining stocks and oil stocks, which have done fairly well over the last year, while the rest of the market is sort of lagged. Well, now the rest of the market is starting to catch up and those commodity sectors are cooling down a little bit. Big picture though, you've got resistance in here. It's likely going to stall the upward rise in this market. I do think there could be pockets of strength in the Canadian stock market. You really just have to look for those areas that are showing strength. All right, moving along, let's take a look at those commodities, GLD. Here is gold, and you can see it had this nice run up. That was, as a hedge against violence in the Middle East, a little pullback, and this week it broke the pullback. I think we'll get up into this zone right in here, but probably not a lot of upside. I think that you have to be fairly careful about trading the gold stocks. Looking at the 3-year weekly, you can see it's pretty crowded at this level. There's lots of resistance there from past hits, and until we can break out through that, I would be pretty careful. All right, what about the oil market? USO is an oil chart, and you can see that oil has been suffering over the last 6 weeks. It broke the upward trend line, it built a falling top, and then it broke down from a falling top, and that's what's the reason why this market has started to move lower. So I think you want to avoid oil stocks in general right now. If we look at the 3-year weekly chart, it's not terrible. You still had this great run up. You've really just been kind of holding strong price levels in the oil market. And so oil stocks are still generating pretty good earnings, but it's not likely that oil is going to help out a lot in the near term. I want to take a look at the US dollar next, and then we'll take a look at Bitcoin and the bond market. And you can see that the US dollar, which was really strong while the markets were moving down since early August, has now reversed, and we're now building falling tops, and that means US dollar more likely to go lower than higher. Different story for Bitcoin, because Bitcoin has been rising, and I've been bullish on this for a while because it broke out through resistance from a rising bottom, and that's what telegraphed this move higher. I think it's probably too late to chase Bitcoin here. I'd rather wait for a pullback and try to buy the break of a pullback, but be careful with Bitcoin. If you're a holder of it, great. There's no reason to sell it, but I wouldn't initiate positions here. All right, and then finally, let's take a look at the bond market. TLT is the symbol there. And you can see that the bond market chart went parabolic to the downside. We talked about that earlier. And it's now working its way up to the downward trend line where it'll probably get stuck. We're building some rising bottoms. I think the bond market is moving up, which means interest rates are moving down. And that is good for the stock market in general. All right, so let's take a look at our ratings then. bullish and neutral, bullish short-term, neutral long-term for all the stock markets. They've started the reversal process. Gold, neutral on both time frames. Oil, bearish in the short term, still neutral in the long term. US dollar, same thing, bearish and neutral. Bitcoin remains bullish on both time frames. Interest rates, short-term bearish and long-term neutral. All right, now we're going to get into the trade of the week. This is an example of a stock that we traded in the Stockscores active live service. You can learn more about that at stockscores.com. And in this particular case, one of the things we look for is my action candle indicator, which the indicator looks for abnormal price and abnormal volume. And we do that on the 13-minute interval. I like the 13-minute because there's 30 13-minute bars on that time frame. So if we jump into the chart, here you see it, SHOT, and it was making a pullback here. So this stock had been strong, it quieted down for a few days, and then it broke the pullback right there. So that was our cue to buy. You see here the little yellow dot at about $1.80, just under $1.80, and it really went on a rip, and it's still a hold, still hanging in there. Had a little bit of a consolidation building on Friday, but I would not buy it here. Don't take it as that, but it is a good hold if you are long of this stock. Remains a stock to keep an eye on. And it all started, again, with not trusting what people say, but trusting what people do. And when they're buying aggressively, buying with abnormal volume, abnormal price movement, that's what that indicator picks up on. And then the crowd comes in afterward. It's the smart money that starts it, and the crowd comes in later, and we sell to the crowd, we buy when the thing just starts to move. Well, hope you've enjoyed this week's Stockscores Market Minutes. Do you think the bond market has bottomed? Do you think interest rates are going to go up or down? Love to get your thoughts on that in the comments. But most importantly, make sure you click on that like button if you've enjoyed the video. And as always, trade well.